This was supposed to be the worst week of June, but it's turning out to be quite nice. Is the July rally starting early? We're going to be getting into that today. We have a lot of charts to talk about. If you're new here, welcome to the show. My name is Michael Silva. This is the Daily Stock Market Brief Show. I do it Monday through Friday, 5 days a week, which might be changing here soon. More to come on that later. Today's date is June 22nd. Before we hop into the show, I want to thank the 700 now and 39 active patrons. I have two different tiers. The $4 is just to support my work as I transition from a full-time employee doing the last 15, 20 years in corporate life, and now I'm over here doing this full-time. I also have a tier that's $9 where you get to see some cool trade ideas and be part of the Discord chat with some other traders as well. One of the trades that we marked out yesterday took off. Now, this isn't typical behavior by any means, but that was pretty nice for anybody that was able to catch that, up 27% on the day. Holy cow. Let's get into today's show. All right, everybody, welcome back. I'm going to be going through some signal charts and some things that are concerning to me. However, we're going to then roll into the indices and some commodities and look at them from more of a bullish perspective. And I just want to give a good round picture kind of view here. If you haven't watched the interview with Michael Gayad, please go ahead and do so because we do talk about some of the risk signals here as well. The first one I want to call out is the sell signal. We call this, we look at this black line. It's part of the put to call ratio, and we smoothed it over. The purple line is the CPC put to call ratio, but then we smoothed it over with a 10 period moving average. When it crosses from the bottom through the red line, which is at 0.8, that is the sell signal. We're not there yet, but we're darn near pretty close. We're at 0.7999. So chances are we cross through that most likely tomorrow, but we'll see how that goes. That means the sell signal would then quote unquote be activated. Now, when you crosses through it, you can see it crossed through here just recently, and we saw the move to the downside. Here, it really just kind of chopped around sideways and then went higher. So that was a false signal there. And it crossed here, it went down a little bit more. You can just see it right here. That was a pretty bigger one. Here was a bigger one. Here was a bigger one. So it is quite relevant. And I don't know if we should be putting too much weight on it. I said that before this one crossed over, and it happened to be more of a pullback, if you want, quote unquote pullback. So we're potentially going that same direction right here. So we just need to be mindful that that is taking place. Another concerning thing that I want to point out is the NI high-low. This is the NYSE high-low index, and I'm going to be showing a couple of different ones of these, but we had that trend break, and now we're starting to see the NI high-low cross through, down through the 20 period moving average. We broke the trend. We're coming back up here to retest it. We're still below the 20-day moving average on the NYSE, the New York Stock Exchange right here. So it's going to be important to watch that because this is a broad market index. It's just important to keep an eye on it. Now, we were talking about the divergence that was taking place on the NYSE McClellan oscillator. And you can see here when we did point that out, it did crack through that, and you can see us coming to back test. When it came down to this reading, minus 175, we discussed, okay, now it's getting a little bit oversold conditions. Chances are we can see that bounce. We're starting to see that bounce. Same thing with the NYMO here. This is just a different calculation. It looks a little bit differently here. It came down to almost minus 60. A little bit overextended. We got that bounce, and we're starting to see that continue. Still not the greatest breath, but up from the previous day. Then let's look at the BPNDX chart. Not much to report here. It is just right above 50, the RSI, so it has room to go up higher or it has room to fall down. Not much, like I said, to report there. However, when you peel the curtain back, the Nasdaq has been doing extremely well here. However, if you just look at the percent of stocks above the 50-day moving average and the percent of stocks above the 200, you're starting to see the overall Nasdaq 100 move higher, but it's not being supported by its internals. So the internals are deteriorating. It's almost like a stealth bear market taking place here as there's few stocks pushing further and further up. So pay attention to that, okay? Many people say, well, that's not even important. It is important because if the big names all of a sudden reverse, this rips down very, very quickly. So you just need to be mindful. It happened here, right? In 2020, you saw the deterioration before the pandemic actually hit. Well, I mean, I guess the pandemic was probably before then, but before the pandemic crash, I should say. But you could see those internals weakening. Now, that doesn't mean that that's going to happen here, but it is still worth pointing out. Now, if you look at the new high lows, as the market pressed all-time highs, just look at the new high, new low index right here. Just look at the reading. it's right here just above 50 and it's pressing new highs. The last time it tried to press for new highs, it had a higher reading. And then the time before that, when it was pressing highs, it had a significantly higher reading. So this is just, the internals are just trash right here. And then if you just look at the new high index, very similar, same thing. Just this big divergence. The market's pressing higher. The new highs, it's weak. I mean, look at here, it was higher, and right here it was significantly higher too. So it's something to just point out, something to keep in mind as you are pressing long on positions. Now, if you don't know this already, on my Discord group, I've only been posting long positions. So a lot of people might say, oh, you're just bearish, blah, 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 whatever. But the only stocks that I've been pointing out are just good setups from a long perspective, my personal opinion. So let's go to continue down this road here. BPSPX, it did get overbought. We talked about that as soon as it reached into the oversold territory, and we call that out. Why? Well, because when it gets this, you can put on typically hedge long positions, and we saw that bounce in the S&P 500. I want to call out that this could be very similar, right, to something like this, where it came down and then we bounced up and then it headed lower. That was during that September through November phase where we started to see the sectors like utilities outperform and consumer staples. And utilities as of right now are not overperforming by any means. Now, if you look at the percent of stocks above the 50-day moving average in the S&P 500 and also the 200 right here, you can see here we had a very sharp decline as the market's really just still at relatively high. So a lot of internals dropped off. We did see the market pull back slightly, something that we haven't seen in the Nasdaq. But actually the reading came down quite low to an over sold condition. So it made sense to see it bounce up, but it is still diverging. So if the S&P 500 presses higher and higher and this doesn't get resolved, we're still seeing the move higher in the S&P 500 not supported by a large group of stocks as they're continually to deteriorating here. So also something to note, the VIX here, we did, I believe, close one of the gaps. That could have been the other day, actually. A very sharp decline in the gaps. Call it VIX Crush Tuesday over here, apparently. One thing to note here, we still have a couple of gaps below us. Those can act as support. We had a slight divergence. You can't quite see it. If I brought up the 15-minute chart, you'd be able to see it a little bit better. But you can see here a low to a higher low and then a low to a lower low. So that's always a possibility to get some sort of VIX spike. But, we're not extended on the lower Bollinger Band. It could continually draft a little bit lower here. More than likely. Also, one to note is the NYSE advanced decline. The market's pressing and going higher and higher, but just look at the internals. I mean, the reading was at 270 right here, 270, and the market just kept pressing higher. And you can see here, we closed below where it was over here, and yet the market was higher than this blue dash line where that open was there. So it just, a lot of weird deteriorating things. So one other thing I want to call out is, if you're not watching the dollar, well, I don't know why not, because there's a strong correlation between the S&P 500 and the dollar. It's been a very tight correlation for some time now, and you can see when the dollar spiked up, we saw the weakness in the S&P 500, hardly. And then now we're starting to see the dollar slightly fall, could be consolidation, and the market is responding quite nicely to that. So one has to wonder, is the dollar consolidating here and then going to potentially head higher, or is the dollar going to continue to fall down, and that is going to help out various commodities as well as the equity markets? We don't know yet, but I can say this. We do have some support right around 91.25 to 91.50. So if we start getting through that, then I think we might even drop another a little bit more here to 90.50 for the next area of support. So we'll continue to see how that develops. Let's hop into the S&P 500 daily time frame. This is where it gets a little bit interesting. So first off, let's talk bullish perspective. One, I mean, it's very hard to be bearish. That's why I always post long setups right now in this context. Why? Well, I mean, the price action's above all the moving averages, right? The 20, the 100, the 200, and we're pressing almost not too far away from all-time highs here. So, it just makes sense to look for long positions. It's not something that you really want to short into. However, a couple of things to note here is, as we ripped higher these last 2 days after a little bit of a pullback, I want you to look at the volume. We had increasing volume selling off. Get it that it was FOMC week and OPEX too as well, so that plays a big part. But then as soon as this week started, let's call out these 2 days. We had some volume come in, okay volume, but then we went higher on decelerating volume. That's not always the good thing. It means that, I mean, to me, I would interpret that as the conviction of buyers there. It's not as high. So if we keep continuing to see a ramp up higher but decelerating volume, I mean, to me that just doesn't bode well. Now, if we zoom into the 15-minute time frame, look at this price action just completely vertical after the testimony today with Powell. You can see here this could be potentially a rising wedge. You don't want to chase this by any means. It got very overextended. We haven't seen it at these levels for quite some time. So if you were able to catch that as a hedge short, that would have been quite nice. I didn't do that. The 5-day moving average is pretty much flat right now to slightly declining. You'd want to see this take a little bit of a rest. And even if it comes down to 420 and 50 cents, nothing's technically damaged. But if we get some massive gap up, I mean, I'd be prepared to sell into that only because it's already been on this crazy tear. And if we get a gap up, our RSI reading is going to get also even more overextended. So it seems to me like people would sell into a gap up tomorrow. If we get a gap down and we get some big spike down in the RSI or it comes way down here or something like that, I would imagine we could see some people buying into that price action. Let's look at the Nasdaq. Nasdaq all-time high right here on the Qs we're using as a proxy. Look at the volume. Okay, keep in mind, right? Yes, FOMC was last week, and then we had option expiration, so the volumes could be a little bit skewed here. But the last 2 days, as we're pressing higher and higher, we see it on decelerating volume. So something interesting to note there. But overall, still in bullish context. We're still within this bearish type pattern here, and it's very typical to get overthrows. Most of the trade ideas that I shared on Discord today were around the tech because tech showed a lot of strength from an absolute perspective. So something to pay attention to. 15-minute time frame, Qs, still in overbought conditions. If we do get that gap up, it's going to be even more overbought. So be very careful chasing something like this going into tomorrow. You can see a rising wedge pattern. We do have an inclining 5-day moving average. It'd be nice to see this take a little bit of a break and then resume its uptrend because today's rally was clearly vertical. Let's look at the Dow Jones. Dow Jones also declining volume these last 2 days as it presses higher. And it's still technically just, this doesn't look all too good as of right now. I mean, it's going to take a little bit more time to repair this. And I would like to see it just kind of like doodle around and then slowly build up strength. If we get some very strong moves to the upside, I mean, that might be good. It'd just be very hard to tell. We'd have to look at the volume. We'd have to look at a couple other factors. But typically long, like big candles, like both green or red, just full body candles, they can act like rubber bands sometimes. They stretch out, and then they can snap back very quickly. So it's something to pay attention to. But we are below the 50-day moving average and the 20-day moving average. And if we're here for a couple more days below them, the 20 period is going to cross under the 50-day. And that's, it's not a death cross, but it is it's more of a bearish sign than anything. And you can see here the price percent oscillator is trying to uptick, trying to turn itself over, but it's also trying to get below 0.2 as well, which is not the greatest sign right there. So this could be potentially a great opportunity as we pulled right into the 100-day moving average, and we're coming into July because July you typically do get to see those rallies. So this one actually might be the better position from a seasonality perspective if we do get to catch that rally. So it's something to just monitor and pay attention to. When you zoom into the 15-minute time frame, it needs to rest a little bit here because you have another rising wedge. It got pretty overextended. The 5-day moving average is still declining. We are getting back above it, so that's a good sign for the bulls. If it pulls back a little bit, that would be nice, and then potentially try to take out that 3.40 and 50 cents right there. If we just get some massive gap up, I'd be very hesitant to chase that. However, the market's been like that. The market has been gapping and just ramping higher and higher. So unfortunately, sometimes it's very hard to trade in this environment, and the market has proven to do that, be difficult here this last week. Russell 2000 Russell 2000 also saw some strength these last couple of days. Everything saw strength these last couple of days. Declining volume as well. This very well can be a topping pattern still. Let's continue to watch this and see how it develops. We pulled into the 100-day moving average. We have our moving averages kind of getting all crossed up right here. That's not the greatest sign. So what you want to see is potentially a little bit more strength to come in, and then let's take out that 235 previous all-time high to head higher. That would kind of destroy the narrative of this being like a complex or advanced head and shoulders, shoulder, shoulder, head, shoulder, shoulder, shoulder type pattern here. So, and you can see the price percent oscillator is still in bearish context, but we have the histogram moving up. So, I mean, like I said, it's still, everything's in still bullish context. This could just be a bullish consolidation pattern, and then most likely, if the bulls take over, right, it's a continuation pattern. So you look at the previous move, consolidates, and then you get a continuation. Could it be a topping pattern? Yeah, absolutely, it could be a topping pattern. But you got to give credit to the bulls because the bulls have obviously control here. 15-minute time frame. Once again, declining 5-day moving average, a rising wedge. If we get a big gap up tomorrow, it's going to be overbought. So expect choppiness. Expect people to sell into that most likely. Can we gap, ramp, and then camp up there? Yeah, obviously that's a possibility. But from a trading perspective, I would like to see this rest. Because that would make more sense to rest, see the 5-day moving average start to flatten out to incline, and then you can position yourself with a little bit more ideals in your favor. Let's take a look at a couple of the sectors. First off, the transports still below the 5-day moving, still a declining 5-day moving average. Price action did close above it. You can see here we did ramp up, and now we've been just kind of trading sideways here. So this could be a period of consolidation. The longer we hold these levels, that's not bad, because as time progresses forward, we lose more data, and the 5-day moving average starts to flatten out to incline. The semiconductors could be forming a bear flag right here. We have a 5-day declining moving average, so be on the lookout for that if it gets overextended. Also, the banks right here, we have a rising wedge too as well, a lot of rising wedges. And it's clearly a declining 5-day moving average. When it was over here, we were discussing that it looked like a pivot point because of the monthly 5 EMA. Well, we got that pivot, we got that ramp up, but it still is going to take time to recover the declining 5-day moving average. Let's take a look at a couple commodities. Oil pressed to another high right here, a high of 73.47 in very, very bullish context. Everything looks really good. Yeah, it's getting a little frothy here, and we might see it doodle around or pull back a little bit, but still from kind of just a technical constructive standpoint here, I mean, bottom left to top right, it's trending very well right here. Gold took a big hit on that 26-day cycle that we were talking about, that research from Tom McClellan, and boom, to the downside. A little bit overextended on the move, so yeah, now we're doodling around right here. We'll continue to monitor this. We have some support right around 1740 and 1760. I did recently put out a video on gold on the key levels that I'm looking out for. So if you haven't watched that, it was posted Sunday, just last Sunday. Bitcoin. Now this, I'm going to go into a couple of things here. This is interesting. So Bitcoin, a lot of people now are starting to say it's a head and shoulders pattern. Yep, it is. And if it breaks the neckline of that head and shoulders, that's targeting it down to significantly lower, if like almost like negative. I don't even know. I didn't do the math. 30 to 65,000. Yeah, so it brings it to basically zero. I don't know. I mean, these head and shoulder patterns, they've been quite unreliable this year, but you can't just be like, oh, it's unreliable, let's just not pay attention to it, because it is still very important to pay attention to. We did crack through this bear pennant little flag pattern, but the bulls really stepped right back in. If you watched me on TikTok, I was actually waiting for an undercut of this previous low, and the idea was to buy into that. I may even post it on Twitter. I can't remember. But we got that undercut, and then we got that rally up. This does not mean you're out of the woods. This right here says, yeah, we can very well bounce, very possible. We can bounce right up to 40,000. It'd be a piece of cake. We have a declining 50-day moving average, and then also that 200-day, we're below that too as well. The bears have control here, okay? The bears have complete control. Now, I want to show you what a top looks like and how it could look. So I'm going to show you the Nasdaq. Now, you don't need to be like, well, you can't compare this to Nasdaq 100. I know, all right? But I'm going to show you the construct. If I remove the name Bitcoin and remove the name the Nasdaq 100, the construct of a top, it takes time. So you need to see this for yourself to really understand, like, wow, okay, and you'll understand emotion, right? So first off, I want to call out this. at the high here, 65,000. Then we dropped pretty fast, about a month and a half, right? About 50+%, 52, 53%. Okay, and then we started to rally back. And what's crazy to me is this right here, all this big euphoric run up made many people say this 50% drop, I'm not even worried about it at all, right? And now it's doodling around. We saw that big ramp up right there. Once again, everyone's like, see, told you, it's getting back above 40, everything's good, okay? Then we saw this fall right here, and now we have other people coming back out. I'm buying this dip too. It's coming into support right here. You know, the neckline is coming into support, and we're starting to see it bounce. Let me show you the Nasdaq in 2000 to 2001. Here we go. Here is a topping pattern for the dot-com bust. Take note of the time frame here. Okay, we're looking at mid-November all the way to mid-November the following year. This topping pattern took over 1 year. So the process is a long time. Now let me tell you this. Big move to the upside. This was a 40% drop. Okay, a 40% move to the downside. And I'm sure that scared a lot of people, just like a lot of people lost money on Bitcoin's drop, okay? But look what happened. People got right back into it, and it rallied up above this previous swing high. So for example, we had that drop, now we're bouncing. Perhaps maybe this bounce right here can take us above these previous highs. All right, that's more than possible. But I want you to look at the construct of all these moving averages and what it looks like when bears do get control. Because this is something that you don't want to just like overlook, and it could very well happen to Bitcoin, believe it or not. There's no reason why it can't happen. Now there's also a possibility that this could pull back and then fly up even higher. Always a possibility, always. But you always want to also find, just pristine entry points, stuff that works well for you or for your, I guess, method of investing into Bitcoins or various cryptos, whatever that might be. But you do need to understand the construct of a topping pattern. So yes, we rallied up higher, and then we came back down. It undercut the low right here, right? Undercut this low, and then we rallied up higher. This right here, it came to back test. Just look at this. So we haven't even been in this for over a year. This is just 2021, okay? So this could go on a while longer. We can bounce up, but that doesn't mean the bulls are back in control. So you just need to be very mindful of that. What happened shortly after this when the crack came down and then we get back tested? Let me show you. That's what it looks like. Here's the top, and this is it, the bubble bursting. Boom, with huge rallies. Then it goes lower. I'm going to buy that dip. Yes, it's coming back. It'll come back. It'll come back. Oh, it'll come back. It'll come back. Oh. And it eventually did come back. Now we're, sitting around, where were we? 14, 15? I can't remember. But that right there is a topping pattern. And we're seeing something very similar to Bitcoin. So just be mindful, okay? Doesn't mean I'm not predicting it, but I am pointing out that topping patterns look like this. And they take a long time to play out. Let's go into the conclusion, okay? I've been talking a lot now. First off, I'm going to look at some quarterly charts. I want to point out transports. This was one big green candle this quarter. And we called that out. We were like, this is crazy. It's above the upper Bollinger Band, completely outside and disconnected from the 5 EMA. Now we have a little bit of a shooting star candle. Notice the big ramp up, lower on declining volume too as well. These things could take a long time to play out. Obviously they could, but you would imagine that we'd at least come tag the upper Bollinger Band next quarter, or the 5 EMA, which by the way is at the end of June, which is not far away. And then these will probably uptick even further. So it's just overextended. It's very overextended, and we're starting to see internals weaken. The SP 500 is completely outside the upper Bollinger Band here, disconnected from the monthly 5 EMA. That's crazy. Wow, we don't see this stuff often. We don't see it often at all. And imagine coming back down to tag the 5 or the upper Bollinger Band. Let's just say the upper Bollinger Band. The upper Bollinger Band is at 4,014. Can you imagine if the S&P 500 fell 250 points? Shoot, it fell 2% and people, lost their minds. But imagine a monthly 5 EMA or quarterly EMA reconnect. I keep saying monthly. That's at 3765. That would be an ideal reconnect, and then we could see this thing progressively move higher. So those are some key levels to watch out for. The last one is the Wilshire 5000 composite. Even a broader perspective of the market, also completely outside of the upper Bollinger Band. All right, so just be mindful. Like when you buy a stock, you're buying it at peak levels, like peak. Like, I mean, not to say that it can't go higher, but what I am saying is it's at its all-time high. All right, so you just got to look for quality setups, and you really need to manage your risk here as we have deteriorating things and some risk signals that are triggering to be very careful. So it's a time to be careful. That's all I got for you on today's video, everybody. Have a good day.